Hi, Mr. Young here. In this video I'm going to look at the balance of payments. Here's the definition. It's a bookkeeping exercise. It keeps a record of our transactions with the rest of the world over, say, a year. So for the UK, we might be exporting bicycles to, say, Italy. Now that's going to be a transaction with the rest of the world, so that needs to be included in the balance of payments. And that's going to be a credit item. It's going to count as a plus. But we're also going to import products from Italy. So when we buy, so one of the things that gets recorded in the balance of payments is our trade in goods. So what's going on here? We exported £100 billion worth of, say, cars. We've imported £180 billion worth of, say, wine. So what's the balance between the two? The visibles referring to trade in goods. Well, it's minus £80 billion. We've got a deficit on our trade in visibles. Another section that gets recorded in the current account on the balance of payments is trade in services. Here we've exported, say, £60 billion worth of education and tourist services, imported just 40, which means we're running a surplus of 20 billion on our trade in services. Now let's go back to looking at the balance of payments. There are in fact two sections. The current account we've already seen, this is trade in goods and services, but there are also other transactions between the UK and the rest of the world which last for more than a year. For example, the purchase of property overseas, and this is recorded in the capital and financial account, and that's really only tackled in great depth at A2. So if we just go through the current account in a bit more detail, these are transactions which work themselves out within 12 months. Trade in goods, trade in services. The third element is income. Income from owning assets overseas. I'll explain that again in just a second. And then current transfers. An example would be the UK's subscription to international agencies, like the IMF. Now the second major component of the balance of payments is the capital and financial account. I'll cover this in some depth in a later video. But for AS, you need to be able to see the link between the capital and financial account and investment income. So how does that work? Well, if a UK resident owns, say, property overseas, then they're going to earn interest on that, and that's going to be remitted back to the UK. And when that happens, that's a credit item on the current account of the balance of payments. Now, there are also going to be overseas economic agents who are resident in the UK or producing in the UK. So for example, an American-owned company may send profits back to America. When that happens, that's a debit item on income in the current account on the balance of payments. So let's pull this together. The balance of payments is two components. The current account is made up of four sections. Now let's just make up some numbers here. Our trade in goods, this says there's a deficit of minus 90 billion. Trade in services, well, here we're in surplus. We've sold more services overseas than we bought from overseas. Now if we add those two numbers together, we get the balance of trade. That's running a deficit of minus 20 billion. Now the net difference between interest, profits and dividends sent overseas to overseas owners of UK assets and vice versa, that's minus 10 billion. There's a deficit there as well. And then on current transfers, a small surplus of 5 billion. Now if I add those four figures together, we get the overall current account position. We're running a deficit of minus 25 billion pounds.